If I need to go out, I can go out, right?
Yeah, absolutely. Hi, everyone.
Absolutely.
I forgot to put my image up. And now we're jumping right into the work. So, as it goes, welcome to Sunday, October the 5th, 2025. I am in sunny central Pennsylvania, right outside the Susquehanna River. It's a beautiful view. I wish you could all see it. It's fantastic. But as we are staring down the charts, which I want to make sure from my feed here that it looks all right. Yes, it sure does. We're going to start talking about what the ES looks like, and the guys and gals on Topstep tell me that Jay is going to be with us next week. So we're going to be sitting in here. Thanks to the Topstep team, we've already got our levels positioned for 9:45. Here's where we stand for a minor macro positioning event. One, we're still in the middle of the government shutdown. Two, we are waiting on the employment numbers so that we can hear whether the Fed is going to turn more dovish or more hawkish. And three, earnings season are about to begin. So before I came on today, the first thing that I did was say, hey, what are the institutions doing? So, as you know, I have some really great tools that do that. And what I noticed was there's a fair bit of institutional hedging. And so what is institutional hedging and how are they positioning? Well, they are positioning for both sides of motion. They're positioning for us much higher, and they're also positioning for us much lower. So what does that tell us? It tells us that there's a great deal of uncertainty sitting inside of the market. So that being said, one, we know there's relative uncertainty. Two, as intraday traders, we've got to realize that the backdrop is uncertainty, and so how we position needs to be really positioned against that uncertainty itself. What do I like to do? I like to go back several days, and I like to look at the volume candles that have the highest participation. Well, what does that mean? It means that traders are either running in or running out, or running in and then running out. Either way, but we don't care if the candlestick is a bullish candle or a bearish candle. All we care about is the range. And so we'll notice this is Friday, Thursday, Wednesday, Tuesday. On Tuesday of last week, we had the highest candle formation, and the top of it was 6,744. Now we'll notice that there was a bit of a fight at that 6,744 the following day. And then on Thursday of last week, we dipped and broke it. Now, I always like to remind folks, listen, a line in the sand is just that, a line in the sand. And when we get to that line, there's going to be a fight. So the number one thing to do as an intraday trader is to remember that fight is going to give you a place where they pierce the low, spike the high, and then pierce that low again. And so we can't just go in and say, hey, I'm putting a limit order in here for long side formation because of X, Y, or Z. I mean, you could, but you'd need to expand your risk. All right? So what are the big lines in the sand we're looking at when the market opens up in 10 minutes? The range. We've got yesterday's high and, Friday's high and the weekly high are the same. It was an all-time high event. We know from what I said about institutional hedging a minute ago, that traders are positioned to capitalize by buying options and option spreads way higher on the chains. They're also looking for put option spreads way lower on the chains. So if anything gets very elastic, they'll be able to take their hedges off quickly and then move back into the range. So what we can see is literally Thursday and Friday, we sat in the same spot. Friday's low, 67.54. So it held a higher low after making a higher high. So far, trend is up. So there's some of us that really love to trade trend lines. I'm not one of those people. I don't love trading trend lines, but it is important to notice when price action is giving us both higher highs and higher lows. That means that what we are staring down is potential dips being buy zones. So we already said 67.44 was that bullish event. We can see that our point of control is right near settlement. It's actually a little bit above settlement. Settlement is 67.63. And the point of control is 67.68. Now, if you recall, especially if you're a Hive member, if you recall, I said, listen, we had 1,000 lot come in. That's one trader, not 1,000, not 1,000 contracts by lots of different people. 1,000 lot. That is a huge notional value. And they came in and they put a short action event at 67.78 or thereabouts. So that number, as you can see, folks are paying attention to it. Somewhere around 67.78, you can see its resistance. This is the day they put it on. They danced around here for 4 hours and then danced around here for 4 more hours, tested it once, and then failed it. So the question is, what are they trying to do? Are they going to unwind the trade so they can get back in long? Or are they going to step into the trade and add to the short? We don't know. The last hour of the trading day does not have the most volume. The hour that has the most volume is the 1 p.m. candlestick. And I find that to be very interesting. It's very unique that we see that 1 p.m. candlestick sitting right there. But that's 6,795 on the high and then 6,753 on the low. My thought is the following. We have downward drift in momentum, upward drift in the moving averages, and we have an upward trend line. So the first dips, the buyers are going to defend. Then we'll see what happens as we get up to the top. Quickly, as we have a little bit of time before the market opens, let's get to the Qs. Anne-Marie, if you were a binary trader, if you were a binary trader with the ES, do you think it would finish the coming week above 6,800 or below? Okay. So I'm going to be completely transparent with you and say to consider binary events in any kind of trading place like Polymarket or whatever, it is literally a coin toss. I have no idea where the chart is going to go. I will tell you this, over time, not the next week, but maybe the next month, I expect us to be higher. But I can't tell you about next week. Why? For the same reason that I decided to share with you what institutional hedging is doing. Now, if institutional hedging had come back and said, hey, we are full on long, or we are full on short, I would have a better opportunity to answer that. But even the institutional hedgers are saying, hold the phone. We got all kinds of things going on. Let's just pump the brakes and add some protection, right? They add protection by buying the puts. They add to their alpha by buying the calls. So they're not discounting either way. And if they can't discount it and they have all their fancy machines and billion-dollar quants, I'm not going to be able to either. So I hate to punt there on you, but, that's what it is. Okay, let's take a look at the NQ. Notice how different the NQ looks, folks. What is the near-term trend between Thursday and Friday? Is it moving up or is it moving down? It's moving down. That looks very different to the ES. So it is my suspicion that they are rotating out of mega tech, as it were, and into other places that aren't performing as well. So I see a lot of profit taking in the big names. Doesn't mean that they're going to roll over, folks. If we had a 5% pullback, that would be a garden variety pullback. But 5% of this very big number of 25,000, that's a lot, right? You're going to feel that pinch as it moves up, right? Because of the actual size of the move in terms of raw ticks. So what are we seeing? We're still making new highs, but we are not making higher lows. And so this tells me this one is also sitting in a space where it's a bit sideways. Settlement, 24,892. Look at how far away the point of control is. The point of control is all the way up there at 25,112. Short as soon as it opens. Now, let me ask you this. If you didn't care about how much you made or lost, it would be very easy to go, all right, I'm going to short it as soon as it opens. But I don't know that's going to happen. So why would I want to position in a place where I have no edge of anything that the market is telling me? Literally, I have no edge. What at all? So no, I would not short as soon as it opens. Now here's the thing. If it opens and then falls to the floorboard and you did it, good on you. That's just not the way I trade. What I want to see is some measure of edge where I can look at the market and go, you know what? It's sitting around here. So for instance, if it fades and it comes all the way into 24,917, I'm going to look over here to these wicks and I'm going to say, if it comes down into this area near 24,893 and it immediately starts to bounce, I'm going to chase it up. Why? Old resistance, new support, overall trending higher. But I expect it to lose the floor since my overall trend is down and my momentum is down. If it gaps up into some of these wicks, I could easily say, hey, I think I want to short that. All right, let's quickly go to gold because everything's going to start opening right now. We're going to hear the ding, ding, ding. And as we sit here in gold, we can see that there's still a lot of buying. Every savage dip has been a buy zone. And I talked about this at length. If you don't watch my morning video, give them a look. I always talk about what kind of reflexive motion we're seeing. So take a look. High on Wednesday, retest of the high on Thursday, no retest of the high on Friday. The failure of Thursday Savage dip down, just like Tuesday. Savage dip down, and every time somebody's buying it up. So what does this tell me? I am very likely to get a run up to the top here, but I have no idea whether there's enough pricing pressure to keep it running. Okay, so Damien, that's such a negative Nelly thing to say. Oh, can I show you how to look at the titles? Let me show you. First, you right-click on them. Then you go to Settings. Then, whoops, that's not it. Hang on. You right-click here. And then you go to Settings. And then you say Labels on Price Scale. Just check that box. And you'll have it, right? Values in status line, check the box, it'll give it to you. All right? There we go. But it's true, Damien, you're right. I mean, every day is a brand new day to lose money. We just don't want to think of it that way. That's pretty bad. All right, let's take a look at the YM while the charts are settling out. We'll give them about 5 minutes to go. The YM has been a beast. Check this out, right? It stayed in a solid inventory building event. Now, if you listen to me often, you'll know I talk about inventory accumulation, where traders come in and they go, all right, let's see if we can agree on whether or not we stay in a certain range. And so the YM has done that for weeks, right? We're just looking at the last 5 days or so. On Friday, it had an absolutely outstanding move to the upside. That was really big. And then it gave most of it back. But like we like to do, we're going to pick the highest volume area. And we're going to watch what happens there, right? Now notice, momentum a little bit mixed. Trend also a little bit mixed. But the goal of the traders, you can see, if we go down to, say, a 5-minute candle formation, right? You can see in the first 2 minutes of trading, the traders are trying to move up. This is an anchored VWAP, right? Let's see where it's coming from way back then. So let's delete that anchored VWAP. All right, and let's put a new one in. Okay, that's where the traders are going. This was Friday's VWAP action at the open. They're going to try and hit that zone, get themselves up into this area, and then they're going to make a decision. The indicator on the right, oh, okay, this is volume by visible range. So what might it tell us? Let me show you how it looks first. We go to settings. It's called the VPVR. Look, how many of you guys like this cup? Check this out. I think it's hilarious. Yes, a sock monkey. Isn't that, it's typical, the world. Gonna have a sock monkey trading. All right, so here's what I do. I have my row layouts by number of rows. I don't do ticks. It's my personal preference. You can have whatever you want. I have 150 rows because I want to see the little spikes up for where price action moves. And then I use volume in terms of delta. Now, notice, if we have up, down, it just looks like this. Blue ones, sellers, white ones, buyers. If I say total, everything's going to be white. For me, I like delta because delta tells me where the climbing points are of the traders moving ahead. That's just me. And it tells me where the traders are going to try and move in. So you could see this piece sticking out right here. My thought is that's where the Qs are going, right? So if I were saying, all right, here's my position. I'm sitting right here. So if I said, hey, I want to buy, let's say I want to buy two of these, right? So if I look at that and I say, all right, there's my stop. My target is going to be right there at that wick that's sticking out in my volume profile event. That's where I'm going to go. Okay? You can use that to give you spaces where price action can move. Okay, so let's take a look at oil. Let's see what's going on with oil. Wow, let's delete all the drawings here. Dink. All right, let's do an hour. We can see it lifting off of the edges, right? Price action. Look at where it comes to. Point of control into the area. We are at a little bit of a strange macro crossroads in oil. Our administration wants oil to stay down. They also want drillers as well as upline. Those are the guys that refine and get things to market. They want those to increase their production. Here's the sad story. Because they are businesses for profit, unless the government subsidizes them, the price of oil is now too low for them to decide they're going to do a ton of capital expenditure. So we are definitely sitting in a spot where things can change fairly dramatically in oil, right? For me, this is a very negative trend. I would say, if I were to look at the 4 hour, I would say this is a really negative trend, but it's bouncing off of key zones that it's had before, and the settlement at 60.88 is still holding. So I think that's pretty good. We could certainly look at that and say, hey, if I come back and retest this, it's going to be all right. Let's go see what's going on with YM. Right? It's pulling back. I have it at the right support zone, I believe. And I am using 1-to-1. Notice, folks, I don't typically use 2-to-1. I just look at what risk I have to assume and head to my target. And if I make it, great. If I don't, I'm out. It's just the way that I trade. All right. Let's take a look at micro Bitcoin. This one was smoking to the upside. Let's see what's going on. Is it lifting today? It's gapped up just a little bit. Let's take a look at this on a daily and see what's going on. Who in here trades micro Bitcoin? Who trades it? Oh, thank you so much. Lupic, you also have to change the overall chart setting indicator name on the price scale if you want to see those Topstep names. Yes, I'm glad. Thank you, thank you. Can you do NQ next? Yes, I'll go back to NQ. Okay, so let's take a look at Bitcoin. It is sitting near all-time highs, right? For this contract, and let me remove all the drawings so we can see what's going on here. We can see that this price action up here at 126,000 is what the new highs that we made over the last 2 trading days. Is that right? No, several trading weeks, those two highs, right? So how do we tell what's going to happen with micro Bitcoin? My favorite thing to do, as always, whether it's on an hourly chart, a 4-hour chart, a daily chart, a weekly chart, I want to see where the most volume is being collected. And we'll notice, have a look, high, at the all-time high, ton of volume there, and here is the low of that very strong candle. Trend, completely up. Momentum, completely up. Dips are buying opportunities here. Look at the width of this formation. If I were to say, where has the price action been accumulating? I would say that it began a box area down here, right? Right to here, right? And so now I'm going to clone this. It'll be a measured move. And then I'm going to take it and put it on the top of... Did I move the wrong one like a knucklehead? No, I didn't. Thank goodness. All right. And I'm going to move that up here. And you can see it hit the 50% area, but the measured move to the upside could be as high as 134,000 in the near term, right? This 50% area is going to be very important when we try to see what the chart's going to do tonight, right? And so that number is 125,000 or so. We'll see what happens, but as it looks, it is pretty bullish, but it's had some pretty solid dips. And so my thought would be wait for the dip action and then trade it upwards as you might want to, right? So I would say maybe try it. That's a 30 minutes, so that's good. Maybe see if the 122,000 will hold, because right now this was accumulation and they are distributing, and now they're doing more accumulation to move to the upside. All right, let's go take a look at NQ, see what we can see is going on here. Someone asked to take a look at it. Let's take a look at the 30. Here we go, right? So certainly if we'd have shorted right at the open, it would have been bad. We expect it to move where? Where do we expect this to move? Old support, broken support. We're going to try and move back up into old support, right? It's going to try and lift there. So if you're steering this down and you go, wait a second, market's 15 minutes in, and we take a look at some 15-minute candlesticks, we can see that our largest 15-minute candlestick is right here at the price number of 25,026. That means that 25,117 is the high of that zone, right? It's trying to get inside of this candlestick to move to the upside. Can it? I don't know, right? If you want to look and say, hey, I want to trade that, listen, we know that that's the probability of it doing that, but if we look at a 5-minute, what is this doing? It's moving sideways, right? We have downward slope action here, but they've been accumulating all the way up here. So literally, if you look at this and you go, well, they might go here and they might go all the way up here, but right in this spot, if I go long, it could come all the way back down to settlement. which is 24,992. Either one of those. What I notice for traders in general, thanks very much, I appreciate that. What I notice traders in general do, they jump just to get into the market, when the goal should be, can I find an edge? I don't know who's old enough to remember the game Frogger. I'm sure they have all kinds of games like this. But there used to be a game way back in the day when we still wrote on stone tablets. Yeah, there used to be a game called Frogger, and the goal was, can you, as a frog, cross a very busy highway, right? That was, hey, listen, let's cross the very busy highway. We're going to go up there. And if you didn't wait for the right spot, you'd get smashed by a car. Trading is the same way. You have to pick your spots. And for me, it's all about support and resistance. It's all about where is supply, where is demand. And way down here, the trader said, you know what? 24,970, that's going to be a good price for me to hold. I'm going to hold that price. And what are we doing? We're bouncing to the top of the range. If you say, hey, I want this to move higher, you can use this 5-minute and you can say, okay, let's think about this. What if you wanted to short? Wouldn't you short right now? Oh, I'm so happy some of you guys know that. Know that game. Wouldn't you say, hey, that's a topping formation, I'm going to short? If you were going to short, right? So a lot of people are seeing that. If there's somebody that wants to go short but wants a better price, they're actually going to place a long position and run your stop and then go in with another short position. So they're going to lose money on the first couple of contracts that they put in, but then they're going to make a bunch of them on the downside, right? So when you're staring this down and you're going, okay, do I want to go long? Do I want to go short? Think about what a sneaky trader might do to get you off your game and move in another direction. Maybe you guys are both going short, but he or she is saying, hey, I'm going to run your stop and then I'm going to go short. You have to think about, what is my opponent doing, right? Some of us are just jumping in willy-nilly because we go, hey, that's the line in the sand. I need to go long. And indeed, that's not quite how things work. It really, really isn't. And I noticed that on the Globex Open in gold, love the fact that you guys are interacting. It just means so much to me. What is wrong with this lady? I don't know. Besides just being a little bit crazy from trading. That's what's wrong with me. And I noticed that on Globex Open, gold seems to regularly bounce on settlement price. It's done it again. Settlement from Topstep is 39.08. Nice bounce from there. Okay, so let's talk a little bit about those sorts of things, right? Settlement is a very important number. Beautiful bounce. This trader, let's see. Let me see what this trader's name is. Desmond. This Desmond says, hey, I notice that we see a bounce off of settlement. all the time in gold when we have the Globex open. Listen, that is a very nice sweet spot. Now, have I noticed that? No. But I am going to look for it now because it makes an ideal buy point if you look to the left and you can see several regions where the price action is holding in that zone. So that's super important. I love that you are pointing out something that you see regularly. This is how you build edge. This is absolutely how you build edge, right? You notice something that happens over and over again, and then you say, okay, if I engage, what's my risk? And can I handle that risk? And can I trade this over and over again? I think it's very interesting that it moved into the high from Friday and then stopped, right? Just over that high. My thought is that a lot of people are thinking about gold being toppy, but it's not. I think gold is... I just looked at some institutional information. They show how much of the average client's portfolio is in a gold instrument, and it's less than 2%. And so that means if it continues to run, they're going to pile in more of that percentage, and it's going to give gold an opportunity to run higher. But as we noticed, these sell-offs have been no joke. They have been absolutely bananas. They've been so crazy. All right, let's take a look at silver. Beth, thank you so much. Let's take a look at silver. Some of us trade silver, some of us trade micro silver. I've had a number of traders say, oh my gosh, you've got to start looking at these metals more closely. And so, again, what are we going to do? We're going to say, where have they been agreeing on let's buy here and let's sell here? So, obviously, they're agreeing on let's sell here at the very bottom, but let's buy here. Let's buy here at the very bottom. Let's sell here looks a little different, and this looks like a pretty good breakout. Now you'll notice silver looks a lot like gold in terms of the savage dip down and then the retracement. Here's what makes silver a little bit more thought-provoking in terms of how to trade it. It is an industrial metal. There are a lot of things that use silver. So it's attached to the economy. If the economy continues to run hot, silver is going to be one of those things that we look at. Right now, here they said, hey, let's sell here. Then they said, let's sell here. And then somebody said, no, fine, I'm taking it out. And so they've tried to buy it up over the break, and now they pulled back and they're holding this edge. This looks pretty bullish to me. This looks pretty bullish to me. Now, here's the thing. Silver moves in 10,000ths of a penny. So you can't sit around and go, yeah, I'm going to give myself, X many ticks, because you can go upside down in a big fat hurry. If you're in the right place, you could make a ton, but it is an instrument that really needs to be watched carefully. If you want to choose something smaller, you can choose the SIL, which is micro silver, and that's somewhat better in terms of pricing, mechanical flow, but your stops are still going to need to be fairly tight. All right, let's go back to gold. Yeah, it is coming back into that edge. It has got a little toppiness. Let's take a look at copper, folks. Some very big voices have come out and said, listen, copper's the place to be. Now, we know that Dee also trades copper. Love Dee. She's just amazing. I love Deanna Angelo. I mean, I really, really do. Huge fan. And what we've seen over the last several days, take a look at this. It's almost exponential, this move up in copper. And so it is on the rise, and it's on the rise because so many folks are talking about it. But have a look. See the same savage dip down, though not in the sort of time frames. This was the yes, we're going to tax copper at 100% or 200%. No, we're not going to do it. So take a look. We're going from high to low. Two ways to measure that. As I mention all the time, we traders, we are very simple-minded. We'll go to the halfway size. We'll look to the left. See if there's noise. If there is, we'll take our profit from an upside, and then we'll start trading again. This one is very long in the tooth. It's moving up a lot. It had all of this area as inventory accumulation from top to bottom. And so let's do a Fibonacci here and see how much it's moved up since then. Yeah, it's almost at the 2x event, which is very close to all this resistance, but also look at these topping formations. So you're going to have to be very careful about trading copper, but it does have a lot of rhythm to it. A lot of rhythm. If you want to learn more about how copper moves, Deanna's show in the early morning Euro trade has got lots of info on this particular instrument. She knows a lot about it, but it is holding. My thought is tons of people have rushed in. They had all kinds of news about how copper's going to $120, whatever. And so now they are, the folks who are following this, they're going to take some profit. So look for that dip. Look for that dip. All right. Oh, chat. You guys. Wait, John Hoagland's in here? John. Thank you so much for being here. John draw the short straw tonight. He's like, oh, I gotta watch her. But you guys who watch me all the time, you know that I give John Hoagland tons of props all the way around. He's awesome. He really is awesome. And to have him moderating is absolutely fantastic. CFD's on copper in a perfect channel. Nah, I don't want to do that. I made 10K on a practice account trading copper. I definitely want to keep learning it. That's fantastic, right? A lot of times, you're too kind, John. A lot of times, we trade with such freedom when a practice account because we don't care whether we're going to win or lose or whatever. And, we get there and we're like, man, look at all that money I made. And then we just clench up when it's time to trade an account that can take you to the next level. And so it's here, right? We like to say it's all about the process, and it absolutely is. but it's the execution of the process, right? If I sit around and talk to you about baseball, I could talk to you about a ton of baseball. You guys know that I'd be a sports widow if I did not sit and watch games with my husband sometimes. But I love, he just said sorry in the background. But I love the sport now, right? Because I've learned to love all the exciting things about it. But I could tell you all kinds of things about process and what's supposed to happen with a player at bat or a player on the mound. But do you think I could execute at all? I'll answer that for you. No, not in any realm of existence. There's no way, right? And so it's about the execution of that process that keeps us between the lines and realizing that the number one thing is, do I have an edge here? And if I position, does this positioning allow me the opportunity that I can sit back and wait on the trade to do what it's doing? Or did I rush in? Did I preempt simply because I want to be in, because I'm afraid that the trade might miss me? Thank you, John. I appreciate that so much. I really, really do. He is the man. Listen, he's made some amazing calls about the rotations back from high to the baseline lows. He's just done an incredible job with talking about gold pulling into its bases all the way around. You know, we're all very grateful for John Hoagland. He's really, the reason that he's at the anchor of so many of our processes is because he is as good as he is. And so, super excited that he's here helping us through, working the crazy market. So, what do we notice about what's happening? Remember, at the very beginning, we talked about, here we have institutions positioning on both sides with a lot of weight, right? It's not like they're being willy-nilly. It's sharp hedging, very big numbers on the call side and on the put side. And so often when we come into the day in the pre-market, what's happening is people are sort of like, let's see what everybody's doing. And what we notice is that everybody's doing not very much. We've gotten in, first dip came right off of settlement, opens up into the space on that 15-minute candlestick, and now it's sitting right at the prior area of heavy congestion. And so they're duking it out, right? Let's go back to our trade that we took at the very beginning. And we can see that it's doing the same thing. It's just dancing around. I'm going to move my stop up just a little. Do I want to do that? No, it's got to stay there, sadly. Right? But it's moved right up into resistance, and now it's coming back to test that edge, right? And it tells us, hey, listen, the traders are treading water. They could easily come down here and then bounce back up. We're sitting right in the midst of all of the noise. And so, it is what it is. Sometimes we simply have to wait on price to do what we think it's going to do when we build our edge. Thank you so much, Trading for the W. I appreciate that. The only trading practice occurs when you have skin in the game. Now, I will say something about that, Ty. It is true, but you can trick your mind into believing it's a real game. Truly, you can. If you looked at your practice account and said, I am going to trade this like it's a real account. And I'm going to focus on it and think about it exactly like that. You will get the reps in that you need. But see, many of us go to the practice account without the mindset of, hey, this is real. Let me ask you this. If you were some kind of athlete and you were in practice, let's say you're a basketball player, you got a big game, and you were in practice and how you were playing was halfway. If you were saying to yourself, I don't really feel like giving it my all, or I don't really feel like doing XYZ, what do you think your coach is going to say? Yeah, he's going to bench you. He's going to bench you. Or he's going to do something even more embarrassing, like let you come in, play for 90 seconds, and then put you on the bench for the rest of the night. Right? So realize that practice has to feel real here before it can feel real somewhere else. And then here's the big thing. We're actually trading in sim accounts, right? We put way too much pressure on ourselves moving from practice to sim. What we have to learn to do is manage risk. And we simply don't do that very well. Most of us are not good at risk management. We're just lucky we haven't been hit by a bus, right? Because we walk with our headphones in on busy streets. We do all kinds of things that we have no business doing, because if we did, and danger did lurk about, we'd be in rough shape, right? So we don't know how to manage risk well. We're not vigilant that way. And it's something we have to learn when we come into the space, because the one thing that we do now is that we have limited funds, right? A lot of us race through our combine. We bet really big. We get super lucky. Not that some of it's not skill. I'm not saying that. But time after time after time with really big numbers, the market's going to come and bite you in the behind. It just happens. It happens. And so your goal as a trader is, hey, I got to make sure that happens as least as possible. And then when we get to the XFA, we take big strides because we're like, finally here, I'm going to get a payout. And what we end up doing is getting ourselves on the back foot simply because we haven't thought about it in terms of real risk. And so that's really what we want to think about. Platinum. Let's go to platinum. Whoa. All right. Yeah, this one's also been running hot. Look at that. Brand new highs today. Okay, let's take a look at this all together. I haven't looked at platinum in a long time. Here we are staring down some kind of massive breakaway. Whoa, check it out. Look at that. Absolutely no volume here. Okay, so let's see if they've done that before. That would be no. This is the last time I looked at platinum, August. Holy smokes. All right. Let's see. Biggest volume event. Is it the short action? Yup. Wow, that's a big volume number. Okay, so let's do an anchor VWAP there. Right, well below us. And then let's use the second highest one in the near term. This is this bullish one right here. Right? And you can see that it's holding the gap. And so we are in volume accumulation. And look at how many days that's been. 1, 2, 3, 4, 5, 6. This is the 7th day in a range. Wow. Okay. So, what do we think? What's the general range here? That's a little bit bigger. Okay, so here's my thought. When I see formations topping like this, my first thought is, and it's not really topping, they're testing highs, right? High, held, high, reverse, 3 days downward, 2.5 days upward, absolutely recovers. So my question is, what's happening? Well, for now, I definitely know buyers are coming in at around this 1,566. So, if I were sitting down staring at this chart, I would draw a line here first and go, all right, they're obviously collecting inventory between 1,565 and 1,651. What a range. Okay? So let's talk about the game that the traders are playing. Let's chat about it. All right, here we are. We open. Everybody sees the topping formation. So what do they want to do? They want to short it, right? But the question then becomes, if they want to short it, but they know everybody's watching, what do they want to do? And so the answer to that is they're going to try and run them out of the trade, get a higher short, and then push it down into the frontline support. This is my thought anyway, right? In general, this is my suspicion about what sneaky traders like to do. And you can see it shoved them over the top, and now we're coming back into the bottom. So what does this tell you if you want to take a long breakout in platinum? Platinum behaves just like gold in that sense. They will come to the top, and they'll pop it out, and then bring it back in, and then move to the north one more time. So my thought is, here's what's going on. Here's platinum. It's in a topping formation. It's going to do one of two things. If we're staring this area down, it's going to come in potentially old resistance, new support. So there's going to be, let's put a buy right there. Right? We got ourselves a buy right around this spot, 1627. You might go, well, geez, Emery, is it going to come back to get me? I don't know, but here's my thought. If I am taking this trade to the north, my goal is not to get caught and be upside down in the trade. And here's what I know. Resistance, 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 breakaway formation. So what do I want to do? I want to buy it near those resistance zones and see if they become support, just like this one. If it doesn't work, I'm out. Could I take a short here? I could, but we're coming into the end of our time together. And so in order for me to take a short, I would have to see the price action fade, bounce, and then fade again, because my point of control is at 1643. Now, if you want to be more aggressive, you can certainly do that. But for me, as many of you know, my favorite areas to go long are areas where I had old resistance become support, break to a new high, and then come back and retest the area. check out the Nikkei. You know, I don't trade the Nikkei much. Let's do that as our last one. Whoa! Okay, that's a news candle. That's a news candle, peeps. Okay. I'm going to have to dig around and see what's going on there. Because take a look at this. See all the traders accumulating. And then this big breakaway of distribution. If we do Fibonacci, it is coming up to 48,655. Now the Japanese market is running pretty hot right now. It's been running up pretty significantly. And so that is also something that we are seeing. But that's impressive right there. That is a big fat run. Right? It's sitting right at the 3 off this lower wave. But again, accumulation, distribution, more accumulation, distribution. If I were a betting man, I'd say that's probably close to the top, but I have not checked the news. And there might be some currency stuff going on tonight. That looks like a very interesting move. Let's take a look at the 10-year. Yeah. We'll just have to see what's going on. More to do. I'll put that in the morning video. That's exactly right. Pro athletes spend more time practicing than in live trades. 100%. 100%. That's exactly right. Someone says, right now the NQ is going sideways, slopways. I like that. It could go high or low. Gotta wait. Absolutely. Absolutely. All right, let's look at gold last, and then I bid you a fond adieu. I don't think Dakota's on tonight, though he might be. I know he's going to be on the exchange tomorrow with Jay. That's so exciting. It's going to be great fun. It's New York City didn't smell so bad. Wouldn't mind living there. Yeah, sorry. Yeah, that's a nice move up, right? And that's also something else. The Nikkei running hot with it. This, and it's even before Asia opens up. So next place is 39.23. And then lastly, if we take hold of this and we say, where shall we go from here? Listen, if retail traders haven't gotten in on the run to the upside, that's going to be the last press forward. And I would not be surprised to see gold at $5,000 in the next 6 months. I really would not. I really, really would not. But remember, gold futures are a financialized product. So you better take profit when you see it and then re-enter and then take profit again. Because when liquidation comes, and it will, at some juncture, it will. When liquidation comes, everything is going to sell at the same time. We saw a little bit of that the other day. Somebody said one question about what's the difference between liquidity and liquidity versus, how do you look at liquidity versus fundamentals? Here's the thing. Fundamentals do not matter in this kind of market at this time. Because something like Palantir, which is trading at 400 times earnings, you can't look at that and go, oh, that's reasonable. We're not. So fundamentals work if you look for deep value, right, where something's priced under its book value. And we don't see those sorts of things in equities, but we do talk about it quite a bit in other spaces. So, liquidity is master and commander in my mind, and it always will be. All right? Hey, listen, thank you so much for spending time with me. Thank you, Hope, for being here, encouraging me and being my teammate. Everyone, stay frosty. Trading is fun. You just don't want to get your fingers lopped off by a mallet or anything like that. So set yourself up. Look for your edge. Learn to be patient. The trade will come to you. And watch those wicks. They tell you where people are buying and selling. Wait for them to respond and simply follow along, right? You don't have to just go frenetically into the market. You can think it through and give yourself an edge. All right, everybody, take care, and I'll see you all very soon. Good luck trading tonight.